Afternoon, traders. This is TraderSwift coming at you from sunny Florida. It's Tuesday, January 21st, 2020. All right, it's been a long time since I've given you a market update. Matter of fact, it was the whole of August in which I made a commitment to do every single day in August just to see how it goes. I'm very much out of practice talking to a screen, so please bear with me a bit. But, I thought I would jump in and give you my opinion on how the market's been doing and where we're headed. So, just like always, I'm going to start with the indexes. I'm going to look at a few different time frames. I'm going to give you some stock ideas potentially, and then talk about exits and anything else that comes to mind. So back in August, it was a very choppy time. A lot of people were struggling at the time. At that time, also, you remember I was taking really small positions. I kept harping, saying, "Hey, go in 1/4 of a position or 1/3 of a position." Or even smaller if you're trading a lot of money, because it's not really a time to take risk. And the market goes through cycles. It goes through trends, and then it goes through choppy times, and then it goes through trends again. And those trends could be either up or down. It doesn't matter, as long as you know the direction of the trend, you can ride that trend. So obviously the trend has been up. And I hope all of you are making a lot of money. I certainly have been. It's actually been pretty easy to make money. You buy something and you wait, and the market just seems to keep going up week after week after week after week, which is great. And this is how it should be. The only thing to keep in mind is it's not going to be like this forever. Now, I do hear a lot of pundits everywhere calling the top. Hey, we're almost there. It can't go higher. We've been going high for weeks, and they're not wrong. We may be reaching some point of exhaustion soon, but we also may not, because anytime you have a situation where everyone is calling the top, somehow the market finds a way to keep going. Or the same thing could be for the bottom. Just when everyone is saying the bottom is in, then it keeps going lower. So, generally the market tries to, or the market doesn't try, but the market does fool as many people as possible. So the game here is you don't want to be one of those persons fooled, and you want to be agile and be able to read where the market's going. So looking at the cues, all of last year, we had that big run up, and then we had this whole period of consolidation from looks like mid-April all the way through October. And then once we broke through that prior high, that prior swing point right there, you can see that we really did take off. Now, I was tracking this other string point, which is the prior high there. Either one is fine. Just just know your levels, and when a level is taken out, that could potentially be a good trade. In some of the prior videos, back when I was making them in August, I talked a lot about ABC structures, and this is actually a good example of one. You've got the A part, and then the B part, which is this consolidation here in the middle, and then you've got the the C to D leg right here. So if you're looking at the cues, this could potentially be a completed A, B, C, D structure, which means, just using general technical analysis, that it may be time for the market to take a breather. Now, that breather could be just sideways, could be flat, or that breather could correct somewhat. And if you're into Fibonacci, it could be that 38 level or the 0.5 level, etc. So there's many different places it could correct, but just know that could happen. But if everyone is expecting a correction or some kind of pullback, then the market could continue to melt up, and I think that's what we've been seeing for the last couple of weeks. So, uh, I'm not saying stop all your trades now necessarily, but it is time to be aware and be somewhat cautious. Same thing on the SPY. Um, Really just kind of following the same pattern, and we're looking a little bit, at least the completed pattern, and if we go much higher, we'll definitely be stretched at that point. If you look at traditional indicators, Bollinger Bands, RSI, etc., you're going to see some oversold, or I'm sorry, overbought conditions, and so be it. But that doesn't mean we will correct. We could very well go higher, but just good to be aware of. The IWM, which is the small caps. Now this was the index that was a bit more in a range all of last year, and when the IWM finally broke out, that's when a big part of the market really did take off. And the IWM still looks good, but the IWM also still has a lot of room to go. When the IWM takes out this prior high here, we could see small caps, really, taking a big leap forward. So something to keep an eye on. Apple, Apple's something that we look at a lot, just sort of as a general indicator of how well the market is doing. And Apple is melting up. I mean, it's almost exponential at this point. If you are not, if you are in Apple, it's probably fine. Just keep raising your stops here. But if you're not in it, it's this is not something you want to chase necessarily. Um, yeah. So I have been looking at the here. I just noticed I was looking at the weekly time scale. That is the best time scale for looking at longer terms. But generally when I do make my trading decisions, I will make them on a daily basis, and use the daily chart. Now, looking at a few stocks. Actually, I'm going to go over to. Let me go over. Sorry, I'm going to first start with this green list that I've put together. Now these are ideas of stocks that are I would consider momentum stocks or high growth stocks, fast moving companies. Some IPOs included, some other just kind of faster paced companies, whether it be biotech, semiconductors, software companies. These are all stocks that I've identified as not being stretched, and could potentially have room to grow. So just looking at some of these OLED, if OLED takes out that prior high, what it's setting right at, so it did take it out. As long as it does find support here, we could see a nice run. Now, if you were to get into this, I would put your stop just right below this line here. AVLR, kind of same thing, same pattern. Datadog here, one of the IPO stocks. Looking at the weekly chart on this one, we do see a lot of nice accumulation. Really ever since this first earnings report, there's been heavy accumulation here, and this is a good pattern for an IPO. So when it does take out, I would say when it takes out that very first day high, right there, that would be the level to look for. You want to look for a close above that level. So it looks like it's the 41.57 level. RATA, RATA. Again, this is a high type flag pattern. In this type of pattern, you can buy in anticipation to the breakout, or you could buy upon breaking out. But just do realize if you do buy the breakout, then it could potentially break out and then come back and then retest those highs. Now the good news is, in a trending bull market like this, breakouts do seem to work, or they have been working more, as opposed to choppy times when you're going to get a lot more breakout failures, which is very annoying and can stop you out many times. ISGR, another good solid pattern. We had this really nice run in 2017. And then all of last year consolidated. So, this one, Intuitive Surgical, starts running. This could be a good trade. MongoDB, kind of the same thing, had a really good run. Last year was very choppy, but it's held. It recovered the 50-day. It's it's sitting right around that swing point that was first established, that first swing high, right there. And we get above that line and we hold it. That may be a good area to take a small position in and see what happens. PayPal, nice little ABCD setting up there. So I would look at this swing point as the level. Rapid 7. This was one I was hot on back when I was doing videos, and you can still see some remnants of some of the arrows and levels that I drew before. But it's getting ready to retest that high, and after that big run, we had a big run, pull back, big run, and then we had a nice rising consolidation, which was very bullish, and then ultimately came up. But then it did correct with the rest of the markets. But it has held strong, and that's looking good. Coupa, kind of the same thing, had a really big run, nice long consolidation, dating all the way back to July, and has really just started to wake up. I've been in Coupa for a while. That is one of the few companies I'm holding right now that's on this list. Peloton, another IPO. Let me switch to the daily. You can see a little bit better. Really, we had this run up, consolidation, and assuming the rest of the market continues up, this could really take off. Now, I tried to go today, but it's still trying to go. The market is open right now, but it really gave it all back. It just wasn't ready. It's sitting right at that level, but that's a good area. Chegg, one of them we used to look at. I think this stock looks pretty good. Nice long consolidation. Some of the others are better than this. I mean, this was kind of a pretty dramatic drawdown, but it has recovered strongly, and I like this one. Anaplan. I'm just gonna go through some of these quickly. Melee, Facebook. We'll look at the weekly on Facebook. Again, run, big consolidation. We could set up for a monster run coming up. Team, kind of the same thing. Software was hit in the September-October timeframe, but it has really found a footing again, and generally looking pretty good. Amazon, again, this is another one that has had just a very long consolidation. This is all the way since August 2018. Now, you can complain about the stock price. You can complain about the way they manage their money, but I think there's no question that at least for the holidays this year, I mean, what boxes were you seeing on the side of the road? It was all Amazon boxes. I am bullish in the long term on Amazon. The question is whether or not it's a good short to medium long swing trade. We take out the highs. I think Amazon could definitely have a good run ahead of it. INMB. I can't talk today. INMD, another IPO, but another good high type flag pattern. STNE, another IPO, and then ZYXI. Their run up, consolidation, run up, consolidation. We take out those highs or some of these levels, we could do that again. So, this is, I think, a lot of really good ideas here, and a lot of, the reason why I want to show these ideas is these are companies that are set up to run, and they're not stretched. So, there may be still really good entry opportunities in these. Let me switch over to another list. So these are a few others I've been watching. Hasbro. We take out this little level right here. We could run straight up to the highs. Domino's Pizza. Maybe that one should be on the other list, but it's not necessarily a momentum stock, but it is a proven winner over time. It's more of a seasonal trade with the Super Bowl and all that coming up, but we start to take out these highs here after this real long consolidation. Domino's could have a long way to go. Xilinx, I'm just watching it. I'm going to wait for the earnings. And those are very soon. Next, maybe let's switch to daily. The 28th. If we see a pop on earnings, I think we'll definitely retest the highs again. AMAT. Again, I like where this is setting. We take out the highs. That could be a good trade. Netflix. I'm just going to keep an eye on for earnings. It's had such a long consolidation after this major move here. So Netflix could really run here. I'll look at the IBB. I skipped some. So IBB is biotech, which has been quiet the last 2 years, but it is sitting right at the highs. And again, I'm on the weekly chart just to kind of show the longer time scales here, but it's sitting right at the highs. If biotech heats up, we know consumer software has been hot. Biotech's been looking good as of late, and so has a lot of the semiconductor stocks, NVIDIA, AMD, and there's many others, the smaller names, could all look good. And a few others I just have on here, but I have talked about a lot. Snapchat, I do like it. Actually took a starter position in Snapchat. It's kind of a really bad place to take a trade here. I did that this morning actually, but I do like it. What could happen? It could very well kind of retest these areas, or could consolidate for a while. But Snapchat. My trade is based on a thesis of taking out this high here, which would send us up. I mean, just looking at the ABC, near the all-time highs of the opening. I do like Snapchat generally, just as a just sort of. I don't care for their product personally, but I feel like they're doing a lot of things right, which somewhat influenced this decision here. But anyway, so I'll keep an eye on it, and then Roku, again, it's had just such a great run, but it's been in just whiplash consolidation mode. I'm not in it. I'm not really. I don't know. It's a little volatile for me, but I do watch it. But yeah, so that hopefully there's some ideas there. Particularly because the market is as stretched as it is, I would just say look for some of the names that haven't broken out yet necessarily, just because you don't want to be buying something at the top. We could have a reversal any day now. So, you'll want to be ready for that. And, the ones that have run up the farthest are going to be the ones that get hit the fastest. It's just the way it is. So, a few other things I should point out. So, in a market like this, there are a few things to keep in mind. So, when do you take profits? And there's a lot of different philosophies on that. You could take profits if you've hit a certain percentage goal. Just let's say based on your risk to reward. Let's say you're trading 3 to 1, and originally you set a 3% stop, and you've made 9% profit. You should take some off, or take all of it off, and look for another trade, because if you never take profits, you will never be a profitable trader. It's just that simple, and it's a habit you need to get into, and just something you need to learn, that even when it feels good, oh, I'll just wait another day or wait another week. Um, you know, you really should take profits. Now, there's another saying in trading, let your winners run. That's how you make the real money, and that is also true. So you have to find the balance. And one way I balance that is I'll take partial profits. I may sell half or sell 3/4 of my position, and then let the rest run, and move my stop up to break even, or even more into profit. And at that point you can kind of have the best of both worlds, but you also have cash available that you can look for some other good setups. Um, so again, taking profits is important. And the other thing is stops. So just because we have had a great bull run um, over the last I don't know 9 to 12 weeks, um, you still have to have stops. Um, just because the market has been going up almost day after day, and almost week after week, or really definitely week after week, as you see on this weekly. Um, it's kind of hard to lose if you just have to wait. But it's not always like that. Um, these were tougher times back in the summer, and the August September timeframe. And then if you were trading 2018, that whole Q4 was just atrocious. And if you had enjoyed the fruits of this entire bull run here, and then did not have stops in place, you've suffered a pretty tough drawdown. And just depending on the time frame that you trade, maybe you were spooked out, and maybe you held your longer term trader. That's okay. But if you're a swing trader, chances are you got spooked out after it was too late, and then you got back in, and then the market rallied, or the market rallied, you got back in because you thought you missed it, and then again there's another dropout. For example, like let's say you sold here, and then the market rallied, and then you bought here, and then it dumped again. So there's your double whammy, and you've given away 3/4 of the profit of the entire run just because of some bad decisions there. So that could very much happen again. So what you need to do is have your rules set up now, um, before that happens, so that when we do hit the inevitable bad day, you will be ready for it. So there, with regards to stops, there's a few things you can do. So you could just based on your original trade, um, have profit targets, as I mentioned, but also have stops. Let's say that could be a percentage of your trading capital, or just various levels that you've set. It could be technical levels. Um, and then other ways, people or other tools people use for stops. Some people, maybe on a shorter term swing basis, may use a oops, sorry, a 20-day exponential moving average as a stop. So that would be this blue line here. So if we either cross below, that could be your stop, or if we close below on a, let's say on a daily basis, um, that would be the AMA on the daily basis. Then that's when we would get out. So looking at Apple, very far away from it. Let's say a lot of the ones I'm tracking aren't below that, but but let's say you did take a position in Pool Corporation right here in this small little consolidation here. Um, that would be an okay place to set your stop, is below that 20-day EMA. Um, or you could set it, so that's one way. If you're trading a little bit longer term, if you're wanting to hold positions, 3 to 6 months kind of time frame, a lot of people will use the 10-week moving average. So I switch over to weekly and I add the 10, which is considered the institutional moving average. So is if you if this stock closes below that 10-week moving average, then you would be out. And that one is usually a little bit tighter than the 20-day EMA, but it also just depends on how the trend is going. But that's another type of stop you could use. And then as we march up, just like, let's say, these last few weeks, as we march up, another way to approach this is you could have your stop is any close below the prior week's low. So this week it was the week of November 4th, 198.91. Then I'd move it up to 199.76. Then I'd move it up, and you see this other week, this week of December 2nd, it actually did cross below and actually nearly retested that 10-week moving average, but it did not close below. So I would not be out using that method. And just continues to march up, continue moving up my stop, and that's also a very nice and conservative way. If we look back in time a little bit, we look here, we tested, we couldn't break through, and then this week here we closed below. So if you got out there, you would be out, for the rest of that fall, which would be great. And then so there's many ways you can approach stops. I tend to approach them different depending on the time frame. If it's a longer term trade, I'll use the 10-week, and then shorter term trades I'll usually use the 20-day EMA, just based on a function of my risk management, whether or not I'm trying to trade with a 2-to-1, 3-to-1, 6-to-1 type trade. And that's it. So I'm going to wrap it up here. The market is about to close. I've got one position I need to close, so I better get off. I've got 7 minutes to do it, and I'd rather not be recording. I want to make sure I can get out of that. So hope you liked this video. Hopefully it was informative, and maybe I'll try to do more of these. We'll see. I've had a very busy last couple of months, moving across the country, up from Boston down here to Florida. So, hey, the weather's much nicer, and it's been good times in the market. So it's been great. But hopefully this is helpful, and more than anything, protect yourself, protect your capital. Don't give it all back. That's the biggest thing I can say right now. So thanks a lot, and cheers.